All right, let's really peel back the layers on this one. Today, we're diving into Capri Holdings, the global fashion luxury group, Michael Kors, Jimmy Choo.
And until very recently, Versace.
Exactly. So our mission for this deep dive, we'll pull out the key insights from their first quarter fiscal 2026 earnings report that just came out August 6th, 2025, and try to understand their strategic direction now.
Yeah, and what really jumps out, from the data is this decisive strategic pivot. It's not just trimming the edges. Capri seems to be, well, sharpening its identity.
How so?
By shedding a brand like Versace, which is, high fashion, they're doubling down on Michael Kors and Jimmy Choo. Accessible luxury. It feels like a calculated gamble on where they see the real growth potential.
Okay, now, if you've been following Capri, this next bit is the real game changer. It really shakes things up. Capri Holdings is selling Versace to Prada, no less, for $1.375 billion in cash.
Huge news.
It is. But what's the thinking behind selling off a brand with that kind of, high fashion prestige? Is it just the money?
Well, the money is definitely part of it. Reducing debt is critical, absolutely. And like you said, it gives them options, maybe share buybacks down the line.
Okay.
But it's also, I think, a strategic cleanup. Versace, with its sort of hot couture feel, was always a bit different from Kors and Choo.
Right. Accessible luxury versus the super high-end.
Exactly. So this lets Capri really focus their resources, manage a more cohesive portfolio.
Makes sense.
And what's interesting, even though Versace is now tagged as a discontinued operation in the financials,
meaning it's separate now, basically.
that's separate from their ongoing business results, it still managed to boost its customer database by 9% in Q1.
Wow. So the brand still has pull.
Definitely shows its power, even as it's changing hands.
Okay, so Versace is out. What about the brands Capri is keeping? Michael Kors, Jimmy Choo, their continuing operations. Q1 total revenue for them is down 6%. Or 7.7% if you strip out currency effects.
Constant currency, yeah. Gives a clearer operational view.
But adjusted earnings per share hit $0.50. That actually beat expectations.
It did.
So revenue's down, but EPS is looking better than predicted. Is this like the strategy working already or just tight financial control?
It's probably a mix, but I lean towards it being a positive signal, actually. Yes, cost management helps, but you also saw improved trends for Michael Kors, both retail and wholesale.
Okay.
And remember that customer database growth, 9% for Michael Kors, too. That suggests the brand's underlying health is, well, maybe stronger than just the top-line number shows.
So consumers are responding.
Seems like it. The goal now is clearly stabilize things this fiscal year. Get everything lined up for growth in fiscal 2027.
Okay, let's drill down then. Michael Kors first. What's their specific playbook now? They're talking about a modern jet set lifestyle, strategies around product value, reinforcing brand codes, renovating half their stores. It's a lot.
It is ambitious. And growing e-commerce, of course.
Right.
Performance-wise, Michael Kors' Q1 revenue was down 5.9%, yeah. But those improved retail and wholesale trends are key. And crucially, their average unit retail, the average price per item sold, that was up mid-single digits.
Stronger pricing.
Exactly. Plus that 9% jump in the global customer database we mentioned, a good sign for future sales.
And Jimmy Choo, what's their angle? Focus seems to be on exciting clients, expanding footwear and accessories, tapping into the men's market too, and digital, always digital.
Right. And for Choo, revenue decreased 6.4%. But again, similar story. Improved retail sales trends. They reported strong responses to new product introductions. And guess what?
Let me guess. Customer database.
You got it. Also up 9%. It's a consistent theme.
Interesting. So tying this all together, what's the outlook?
Well, looking ahead, Capri Holdings is projecting fiscal year 2026 revenue for Kors and Choo around $3.375 to $3.45 billion. The focus is crystal clear. Stabilize the business this year. Build a foundation.
For renewed growth next year.
Exactly. Consolidate now, extend later.
So the big takeaway here, Capri is really making a bold move, redefining its portfolio, using that Versace cash to streamline, get lean, and pour investment into Michael Kors and Jimmy Choo, trying to be more agile, more focused.
Yeah, but this raises a really important question, doesn't it?
Which is?
How will this much tighter focus actually allow Michael Kors and Jimmy Choo to stand out? To really differentiate themselves and grab market share in what is, let's face it, a fiercely competitive luxury space?
That really is the core question now. Something for you to consider as you watch this play out. How does Capri's hyper-focus on these two brands stack up against other luxury groups with broader portfolios? Will this leaner approach let them outmaneuver the giants? Or Does losing Versace mean losing a certain kind of market cachet? It's definitely a fascinating pivot to watch in luxury fashion.